Welcome to today's webinar. Hope everyone is doing well today. We have partnered with Giraffe today to bring you this webinar. I'm really excited about this because I think it is hard to find an accounting or a finance publication that doesn't say what we're going to get paid for in the future as professional accountants is looking forward and not just looking back and reporting what's been happening. So helping people as part of their CAS practice do financial planning analysis, I think, is really key to that. And we're going to help provide a step-by-step guide for how to do that. So before we get started, let me just give you a few of the administrative items for our webinar. If we go to the next slide, we'll have a 50-minute session today, which is good for 1 CPE credit. You do have to attend the whole session and answer at least answer the 3 polling questions that we have. If you do that, we will send you a CPE certificate and a recording from today's session. I will also reinforce, while people can't talk during the session, we do have the question feature and we'll use that really actively. So if you'll put a question in there, we'll be monitoring those, and where it seems appropriate, we'll fit those questions in to make sure that people's questions get answered. I'm Tom Waddleton. I am one of the virtual CFOs at Summit CPA Group. I've been here for about 4 years, and my full-time job is helping clients work through CFO services, and so forecasting is really near and dear to my heart. I live in Indiana and pretty active with the Indiana CPA Society. So if we go on to the next slide, tell you a little bit about what we're going to cover today. So we'll take you through introductions and talk about different accounting and firm trends, talk about what is financial planning analysis, and give a step-by-step guide on how to deliver that. But then I'm hoping a lot of firms are really interested in, so how do I turn that into a product and build a whole practice around this, not just how do I deliver that? So that's kind of the series of things that we'll be taking you through for today. So a little bit about Summit CPA Group. So since 2004, we have provided CFO and back office services to our clients. 8 years ago, 2013, we became a fully distributed firm. So everyone is a remote company. I know probably everyone on this call was remote during 2020. We were doing that a little bit earlier and have continued doing it after the pandemic. That lets us have our 55 employees across the country and around the world. So I see we've got our number of attendees and 1 cat for sure in the audience today. So I'm one of 55 employees. We actually got together for an in-person retreat about 2 weeks ago. It was an excellent time and had people actually traveling internationally for that, as people can work and live anywhere if they work with us. So a little bit more, let me tell you a little bit about our speakers today and who's joining us. So Jake Grimm, and Jake is a CPA. He does CFO services and used to do that on a full-time basis. He is now our Director of Technology with Summit CPA Group. Evan Wells is in charge of operations with Giraffe. And then also Mike Triantos is the head of accounting and partnerships with Giraffe. So Mike, do you want to go ahead and continue the presentation?
Sure. Great to see everyone here on this webinar, and thanks for attending. We really appreciate it. I just wanted to give just a brief background before Jake and Evan and I kind of dive into the topic for today. Giraffe is a all-in-one forecasting, budgeting, reporting, and analytics tool. And our true mission here at Giraffe is to empower the accounting community around their FP&A advisory. So we guide firms on their strategy and implementation of their FP&A services. So I'm going to start basically to get a level set of the audience here and dive into our first poll for the webinar today. So Tom, our first polling question, would you like to cover that?
Sure. Yeah, so this one, it is already up, and so it's asking people what level of financial planning and analysis services you currently provide to your customers or to your clients. So I'll leave this up till, for probably about a minute and a half or so, but please go ahead and answer that, and then we'll continue with that.
All right, so it will be interesting to see, in the audience who's delivering FP&A today. And I think the main point of this initial polling question is to help Jake and I and Evan kind of guide our conversation today.
Mm-hmm. So what I'm seeing so far is that less than 50% of the people are saying that they are delivering those kind of services, but they would like to.
Okay.
So we'll leave this up just for probably about another 20 seconds or so. So if you're really thinking through your answer, go ahead and get one submitted there so you don't lose out on that.
And Tom, thanks for the intro music there. So hopefully everyone's having a beautiful day today.
Exactly, yeah.
Yeah, someone asked me what my favorite band was, and certainly you too. So
I like that. It's funny to watch the old videos. I
yeah,
think
right.
early on he says something like the traffic is stuck or something, and you look and there's like no cars on the road. I thought someone should have said, "Can we at least show a traffic jam in this?"
Yeah.
Okay, I'm going to give about 5 more seconds. I'm going to go ahead and close this polling question, and Mike, I'll show you what the results are. Okay, and we're closing it now. Okay, so we do have a fourth of the people here today not with an accounting firm, but then you can see still less than half the people are saying they're not delivering these kind of services.
Yeah, but it's interesting. We have, a good portion of the firms, close to 36%, that are doing FP&A today, and then another 39% there, as you can see on the screen, that would like to. So I think this is going to be a great topic for everyone on the call.
Yeah, I think you're right.
All right, let's kind of set the stage here and hit our first section of the topic here. So what I really want to be able to do here is level set around the trends that are happening out there in the accounting profession. And I wanted to start here with just Jake. Jake, what are you seeing at Summit CPA in terms of some of the top trends you're seeing at the firm level?
I think now more than ever, and it's definitely been a trend for a little bit of time, but just moving towards automation, moving towards other technology options. I feel like a lot of different things from the accounting profession, whether it's tax, whether it's bookkeeping, recording transactions, that sort of stuff. More and more that's moving to automation and ways that we can take those hours off of our staff and really move those towards something that's more from a consultant nature. I think that's really one of the main pressing items for CPA firms going into the future is how can we be more of a consultant with our clients, and that's what's really going to help stand people apart.
Yeah, it's interesting, Jake. You touched on three things all at once here on this screen, because you're talking about automation, number one, to drive efficiency and standardize some of the delivery around accounting and FP&A. What that does is free up staff time to be able to deliver those services, and then delivering the advisory piece, which is on the bottom of this slide. Evan, how about you from what you're seeing on the Giraffe side? You work with hundreds of accounting and CFO firms pretty much every single day. And what are some of the trends you're seeing from a client expectation perspective?
Excitement. I think people are excited to start thinking about the future of their businesses and having the tools available to them to provide these insights. We're in a technology age, and data is highly available to us now as accountants, and we can do a lot with it. And with the tools and things that are coming into the market, like a Giraffe product, provide the basis for you to have relevant and real-time information around your business. And I would say generally people are excited about the future.
Yeah, and as you kind of look at this screen here, Evan, in terms of what you're seeing out there every single day, there's this kind of move towards moving from the historical data to future data. Can you kind of just describe that just a little bit in terms of what this slide is showing to the audience?
Yeah, so what we're looking at here is, in these bubbles is, sort of the retrospective sort of perspective, right? This is where CPAs have been trained as practitioners for 100 years now. We've always looked back in time to make sure journal entries are appropriately booked and financial statements comply with GAAP. And then we've sort of moved into this like management accounting type future, right? Where we're starting to look at things that are non-financial information that actually drive the business and put together long-range plans and things. And then you start to ask yourself, how do I make these things happen? What kinds of incremental changes can I make in the business to achieve this long-range plan? And how do I measure it against how the business is performing?
We may have lost Evan there for a second on the audios.
Nope, he's still here, Mike.
Yep, your audio went weird.
Can you hear us, Mike?
I'm going to forecast that Mike's
Tom, can you still hear us?
Yeah.
Okay. Yeah, one of the things that I look at on this slide is, from a client expectation perspective, kind of moving from that historical perspective on what has happened to what things have happened. And the interesting thing about this is that there was a study done by CPA.com last year, and one of the key questions that they were asking entrepreneurs and business owners was, what are the top needs of advisory services that you need from your accounting partners? And as you can see here, like one of the top things that came up was revenue growth in business modeling, followed secondly by budgeting. So you're seeing within here some of the core pillars of FP&A being surfaced by business owners. So we kind of put our shoes in the business owners. What they're really wanting to do is focus on that future strategy. And the study certainly shows that there in terms of some of the main things that came out of that study. 65% said revenue growth, business modeling was number one, followed shortly by budgeting at 46%, advanced KPIs and reporting, and even cash flow optimization was there as well. And these are the core tenets and pillars of FP&A. So as we kind of look at this, you know, when we look at the FP&A lens, we're moving from this historical data, which, you know, is now kind of the table stakes, moving into more of this predictive modeling scenario. And what that ultimately means is that it positions the accounting firms to go into strategic advisory, and more importantly, the interpretation of that data. And that's exactly what these business owners and entrepreneurs are asking for.
Mm-hmm.
So let's head to the next polling question, Tom.
Okay, put that up now. Okay, so we're asking people how often they meet with their clients, and you'll see that you can select multiple boxes. So if you have a high frequency where you meet maybe monthly with a group of clients, but weekly with a different group, we would be interested in people marking more than those for kind of indicate the frequency that you're meeting with your clients.
All right. So as the results are coming in here, we're asking the question, how often do you meet with your clients on average? And I think this is kind of a telling area here once the poll numbers come in. Are you meeting with them weekly, monthly, quarterly, or annually? We'll talk a little bit later in the webinar around the interaction model with your clients and how FP&A can really set you up for success as it relates to the frequency there. So polls coming in. Tom, you want to just give a little bit of overview here?
Yeah, so it looks like about half of the people are either quarterly or annually, half of the ones who are with an accounting firm, about quarterly or annually.
Yeah.
Sorry, half the people who answered. And then about a fourth of the people monthly, and not very many people weekly, about 15% of those people.
Yeah. Interesting stat here. So, you know, as I think about this, Jake, for a second, how often is Summit CPA meeting with their clients?
Yeah, predominantly weekly, especially for the ones that we do the FP&A role for. I would say, I don't know, 70% of them I would guess weekly. Then it falls into bi-weekly with some other clients, and then everyone else kind of within that realm of services is typically monthly. So it's usually A or B for the most part for us. Very few stragglers, and it's usually more on the just general tax planning side, tax only clients that would be quarterly for us.
Yeah, that's amazing.
Those older clients, right?
For the most part, 100% of your clients are being interacted with your team members on a monthly basis, with the predominant ones on FP&A on a weekly basis, right?
Yes.
And that to me just creates a lot of stickiness with the client, because you're really talking to them about their business on an ongoing basis. All right, so we've left the first section of setting the stage around firm trends, client expectations. And now we're going into, you know, the definition of what FP&A is. And just on a very basic level, you know, FP&A is a set of activities that measure the financial health of an organization. It's planning and budgeting, it's forecasting and modeling, it's the integrated financial planning, everything that you see here on this screen. One way that Giraffe looks at this is that we look at it through the lens of the Gartner financial maturity model. And Evan, I wanted you to be able to speak to this maturity model, but more importantly, I want you to put it in the lens of the audience here about how they can start thinking about it and stepping into FP&A through the maturity model.
Yeah. So I'm going to go through a very concrete example for the audience here. So when you're the first two bubbles here in the dashboarding and reporting, you know, that's on the left side. That's what happened. And then on the right side, the two bubbles, the forecasting and budgeting, that's the future piece. And as you get further from the left side up into the right, you become more into the driver's seat of the business and trying to understand what's happening and making it happen. As an example, you can construct a financial forecast that uses days payables outstanding as a mechanism to determine cash flow. And you might want to go back in time and understand historically what your days payable outstanding was from a descriptive analytics point of view, diagnose the business, see how the cash cycle's working. But when you start to predict and say, well, what if we stop paying as fast, or what if we pay faster? That starts to get you understanding what the cash impact is for making these changes in the business. If you were to provide better credit terms, and that resulted in, cash not being collected as fast. And so that would be an example of taking a KPI that you can measure on a dashboard and report against, and use it as a mechanism to forecast the balance sheet working capital and start to get into a prescriptive conversation around how to manage the cash of the business.
Yeah, and Jake, do you think about this the same way at Summit CPA in terms of moving from the descriptive all the way up to the prescriptive from a CFO perspective?
Yeah, 100%. And I know it's definitely a combination of both financial metrics that we want to track, like Evan's example of payable days. It's very specific to your accounting results, and then even needing to go the next step further of breaking it down into some non-financial, profit and loss metrics that you need to track as a business that can really power detailed and accurate budgets and forecasts for your clients. Yeah, 100%.
Yeah, so we're starting to frame up what is FP&A here. We looked at the lens of the Gartner financial maturity model. And one thing I wanted to cover here is like the building blocks of FP&A. And the way to kind of think about this is on the left side of this screen is all the data coming in that's going to form the forecasting model. Of course, we need the GL information coming in. We need the chart of accounts. We need the trial balances. Another key component that we have to bring into the forecast is the workforce data. 70% of a cost structure of a company is tied to their people. So as you kind of look at these building blocks here, and we kind of go around this clockwise, other key elements here is operational data, right? It's the data coming in outside of the GL, and this is very important to bring in. Examples of that could be marketing funnel information that drives a forecast for a SaaS company. You're bringing in website visits, you're bringing in, customer counts, conversion rates, those types of things. In fact, I think a stat is out there is CFOs that are using operational data as the building blocks of their forecast within plus or minus 5% using that data. That's pretty amazing stat. The other piece of it is really kind of going into the drivers and assumptions. These are all the mathematical formulas that are driving the underpinnings of the model. And of course, from an output perspective, insights, KPIs now, BVA reports, variance reports that are coming out from the model. But let's focus now on the model itself, and that's the annual operating plan and scenario plans here, and some of the key assumptions that are driving that. Jake, I wanted you to just talk through to the audience, like, what is a model from your perspective at Summit CPA? And in this case, if you can just give some examples and focus maybe on the revenue builds of the model, that would be super helpful to the audience.
Yeah, 100%. Kind of as I was teasing on the last slide or two, for us at Summit, a financial model really becomes impactful and a solid reporting mechanism for our clients when we can dive into the non-financial metrics of what makes up the model, whether it's revenue, whether it's expenses, whatever it might be. So, specifically on the revenue side of things, we might want to be able to break down in this example some specific non-financial metrics and targets that we can give back to a sales team. We know that we need to grow our revenue and have a certain sales target of 45 units in a given month. And from there, looking at our past metrics, we know our sales qualified leads, we usually close 20% of them. So we need our salespeople to be having a conversation with 225 qualified leads in a given month for us to hit our target of 45 units, for example. And you can start breaking those sort of mechanisms down where we have these specific benchmarks and targets that the clients that we talk to need to hit, and we can then report on those on a monthly basis and figure out how, what actions do we need to do to improve those. Sometimes it can be, specific things of, website visits, that help drive a revenue model. And so what actions do we need to have? What things can we pour on the business to try to drive up website traffic? And just being able to have those key metrics as part of our model, not only to build out the forecast, but then to report on those to see how accurate we are in those non-financial models, becomes a very important foundation piece to having a detailed and an intelligent conversation with our clients as it relates to the forecast that they're trying to hit.
And Jake, how often are you tempering entrepreneurs' expectations around some of these things? Because I'm sure some of them think they can drive 90 units a month, right? So that's the advising conversation coming in, right?
Yeah, definitely 100%. Yeah, playing out different scenarios can sometimes be important to kind of show like what it would look like under different areas, and then once again, just being able to have that reporting foundation as well to show like, hey, I mean, it'd be awesome if we can do 90 units, but this is what we've done in the past. So let's make sure we're planning on something that we can achieve. And it's great to set stretch goals, but let's figure out like what kind of business model do we need to be based on some expectations that we expect to hit.
Yeah. So Evan, we're gonna shift, or Jake, we're gonna cover one more thing around the model itself, and that is, we talked about the revenue component here for a second, but let's talk about drivers for a second and how they ultimately are the underpinnings of the mathematical components that are driving the model here. And I think we have an example here around customer churn here for a second that you can walk us through.
Yeah, so drivers are basically my thought process. It takes one certain output or input, interacting with another input to get a certain output. So talking through customers, for example, a final number can drive a lot of different areas of our business model. So in this example, we have total customers, which could drive our revenue. We have a couple different avenues to get to total customers. What new sales did we have?
You're good, Jake.
I'm cutting in and out.
Nope, you're good.
I'm good. Okay, so we could have, from a total customer that drives revenue perspective, sales that we had previously plus new sales that we're expecting, along with maybe some client churn that we're going to have that drives total customers at the end of the month and what revenue number that will drive. But we can also use that same driver to impact some of our expenses, support headcount. We need a support person for every 25 customers we bring in. So every time we hit a certain threshold, let's add a new support person into our operating expense. Rent expense, we need to get a bigger space for every so many headcounts that we bring in. So a lot of different things that you can kind of start with a very basic model of just total customers and really break that down into a lot of different drivers that impacts accurately the scalability of the business.
And Evan, as we kind of pivot on that, I want to kind of go through another piece of this, and I want to look at it from an OpEx lens perspective. And I want to talk a little bit about like assumptions here. So assumptions are another key component of the revenue model. Can you just walk the audience through the OpEx lens of assumptions within a financial model?
Yeah, absolutely, Mike. So leveraging off of what Jake was just speaking about with the example of for every 25 customers, you need a support individual. You can have an assumption that's tied to every new hire that says, for this new hire, purchase this laptop, buy this software package, and put a fully burdened rate of some percentage, 23%. And so when you get the output, it's going to multiply those assumptions against those headcounts in order to get a fully baked expense model into the forecast. And so when you construct a financial model, when you're talking about a financial model, not just a flat budget, it would automatically do all the downstream expenses when it adds on that new headcount for you. And so you do the work once and you don't have to do it again. And then you can surface your assumptions and adjust those accordingly. That's why you want to call out an assumption, so that you can quickly and easily analyze, well, what if we offer better health benefits? And so my percentage goes up for fully baked, for a fully burdened headcount. Or what if I buy more expensive laptops? Or what if I, decrease my software expenses? And you can start to look out into the future of the business 12, 18 months out based on your revenue forecast that's going to be automatically adding these headcounts, and see what the impacts are of changing some of those variables we're calling assumptions in the model, and see in real time what's happening in the business and have a conversation around that.
All right, thanks, Evan. Appreciate that. That's a great background on that. We're gonna move to our next section here. So this is section 3 now. We've covered the key trends that are happening within the profession. We've defined now what FP&A is, and now we're going to move to this step-by-step guide to FP&A for the audience on the webinar today. And one way of thinking about this, and we've consulted with hundreds of firms out there, is to be thinking about your step into FP&A from this crawl, walk, run approach. And one of the things that I advise firms to be thinking about as they step into FP&A for the first time is, let's automate the reporting process. Let's start with simple forecasts and reports, what we call short range models. Then we can start moving into more complex bottoms up models that are a lot more sophisticated for the end client, and then start moving into what we call strategic planning, and then ultimately long range planning. So the first step into this is automating the traditional reports, the historical reports that we've been talking about. And I think the key thing here is what this is doing, and Jake touched upon that earlier in the conversation. When you're doing this through automation, what you're doing is freeing up staff time. When you're freeing up staff time, it gives them more prepared to start talking about more insights within the business through these dashboards and reports. And so you're having more meaningful conversations every month regarding the financials, regarding some of the key KPIs that are happening within the business. You're kind of setting yourself up for the conversation to start stepping into FP&A. So the next step here around this is really thinking about it through the lens of how to do simple forecasting and budgeting. And Evan, we consult with firms every single day around this. Can you kind of describe how firms can step into forecasting and budgeting using a simple tops-down type of approach?
Yeah, it's one of my favorites. This call is about starting a successful financial planning and analysis service, right? And so, the way to win business is just go out, get their accounting information pulled into a tool like a Giraffe tool. I obviously favor Giraffe because I work here, and then just go through and do a trended 6-month average of the business and forecast it out, and then just start measuring up against it over time as a starting point. And so you can just take your expenses, take a trailing 6 months, take your revenue, take a trailing 6 months. And then if you want to, you can put an assumption on top of that and say it's going to go up 5% or it's going to go down 5%. And so you can start to generate that conversation and get the interest of the clients and start to show them that there's value to even dig in further and start saying, well, what's really driving the business? Because the trend isn't going to get you all the way there, but it at least starts the conversation around just a very simple budget versus actuals, very quick to build, very simple to understand as well. And I think that's one of the key things for the clients is if you hand over a fully fleshed financial model and it's kind of overwhelming to kind of absorb, right? It's much easier to absorb with just a simple, okay, this is my business trended out if everything stays the same, but everything's not going to stay the same. So let me think about it. I think I'm going to add a new sales rep and that's going to have an impact over here. How do we do that and construct it? And then you can take that home and do some homework on it and come back to your client and say, well, now we're making these incremental changes in the business. I think it makes sense to hire a sales rep. That's the advisory conversation.
Yeah, for sure. And, I think that simple tops down trended model, I think is a perfect opportunity for firms thinking about FP&A for the first time. And now we're going into some of the outputs that are happening here from that trended model. And Jake, I want you to talk to the audience a little bit now we're starting to have more consultative conversations now with the entrepreneur and business owner. You do it on a weekly basis at Summit CPA. Some of those outputs that, that Evan just referred to around getting that simple forecast and budget now have turned into outputs around variance analysis, management reporting, board reporting. Can you just walk the audience through kind of the interaction model you go through every week to discuss these types of things with the business and the insights that the entrepreneur is gleaning from that?
Yeah, for sure. As we meet with clients weekly, the focus really starts to dive into specific areas of the financial model. Is kind of, in my experience, is kind of where we transition. So, once a month we're looking bigger picture at the full financial model and how everything comes together. But then we'll break that down into the areas of importance for different segments of the business. So the first of the month we might be, doing some management reporting and talking with the sales team about sales targets for the month and what they're seeing there, and use that information to update some of our revenue expectations. Another weekly meeting, we might be meeting with some department heads and talking through the variance analysis from prior months from some of their, the departmental budgets that they have and what they're expecting over the next couple months. And so it really starts to break out to getting into the finer details of a financial model with your clients, and really having a full grasp of everything that that really drives the profitability of the business.
Cool. Now we've gone from reporting, we've gone to tops down budget forecasting to this variance analysis. I think the next thing, Jake, is to really talk through the annual operating plan. This is the linchpin, I believe, of everything to set up not only the strategic conversation but more around the long range model. If you look on the right side of this slide, we kind of have a rhythm around it. There's a calendar rhythm around the planning cycle. Can you just talk through the audience some key components of the calendar rhythm of the annual operating plan and the planning cycle that you go through at Summit CPA with your clients?
Yeah, you hit on a really important piece with our advisory services that we're giving our clients is that annual operating plan. So we have definitely that distinct difference of a budget that we set at the beginning of the year, and then a forecast that we're updating throughout the year. And it's very important to still be able to take a step back and see how does where we're standing at today, how does that compare to what we were planning for at the beginning of the year? An analogy that I know Adam with Summit has said a lot, really once you kind of put a plan in place on paper, at that point is when you're able to take actions to get to that end result. If you just go out for a drive and you're trying to get down to Florida, you might eventually get there, or you might end up way over somewhere else if you're not following directions of how to get to Florida. But if you have a set map of how you need to get there, you'll be able to follow that. You might have some slight detours of something you want to see, but at the end of the day, you'll get to where you want it to be. So it's just important to set those annual budgets. We're going through that really in the fourth quarter with all of our clients of a year, setting the next year's annual budget, and then always having that conversation with them, probably at least quarterly, of how we're tracking against that annual budget, or maybe it's a 3-year plan, and making sure that the direction of the business is still going towards the way that the business owner really wants to.
Great. That was awesome, Jake. It sets the stage, really, everything that you talked about there on how to operationalize this with your clients around this calendar year cycle. So I think we're tying this all together now around this component now, and what's this really mean for you as a firm? We've created these mission critical insights around dashboarding, reporting. You're able to do these tops down forecasts and create rolling forecasts, and now the outputs there, of course, on the variance reports and the board packages. And now what you've done is not only delivered really high value to your end client, but more importantly, you have a monthly revenue stream now happening within the firm that is not only going to improve revenue pretty dramatically, but also improve margins within your CAS practice as well. So Jake, one more thing, and I know that Summit CPA has used Excel before in the past. You've used other modern FP&A solutions. Why the move to more modern FP&A solutions like Giraffe to really, standardize your FP&A practice?
Yeah, I mean, the biggest thing that for us, especially when you look at like the Excel example, started with the error reduction, number 4 that you have on there. You get into some really complex Excel models that you have buried formulas in one spot that you just don't realize that something is wrong and just messes up the whole model. So that's like one easy thing for sure that just kind of drives a lot of the other areas of the speed of delivery and the automation and being correct is one of the biggest things of driving towards a modern FP&A solution. The second thing that I think our clients are pushing more and more towards is cloud-based solutions that they have some visibility into. I think really, gone is the day of PDF reports, after the fact for clients and using that to kind of analyze business results and where business is going. They want to have solutions that they can get in and see themselves, that they even have the ability to make some minor adjustments to the model and see what that impact would be. So those are probably the some of the biggest things that has driven Summit CPA to use a modern FPA solution like Giraffe.
Tom, we're going to head to the next polling question for the audience here. And as we bring up those answers here in a second, we're trying to get a gauge as we head into the next section around productizing FP&A. So we're curious to understand how you're pricing these services today within your advisory practice. As Tom's bringing that up.
Looks like we have about 84% answered, so probably looking for
It'll be interesting to see
couple more.
Where the answers fall here.
Looks like 31% value-based and hourly.
Yeah, so interesting here. Most of the audience using a combination, but a good portion still have gone down the route of value-based pricing. All right, so we're moving to the next section here on ways and strategies to productize FP&A, and we are going to talk about the first one here, and that's value-based pricing versus hourly billing. Jake, Summit CPA, you guys have moved to value-based pricing model. Just describe what the rationale was to move to it, and what was the key factors that drove the firm to that decision.
I mean, that was definitely one of the foundational spots of when Jody and Adam started Summit CPA. They wanted to be different from traditional accounting firms, and that was one of the main areas, along with others, that they wanted to deviate from. Really setting up a recurring model for sure from a business standpoint, but then second, really showing and delivering value to clients. Breaking away from the traditional hourly mold where clients might be scared to ask questions or really start questioning how long you're spending on items because of the fee that's coming in after the fact. and second, wanting to, we, took away, another layer that we took away, the value-based pricing that I think is important is, it's also a weekly ACH fee from our clients. And that just takes away, some of the weird things about having, cash flow conversations with clients about open bills that might be ours versus other things. It's really being a part of their team, kind of just embedded into their system, I think is important, and really being able to deliver and show the value of the services that we are providing. I think that goes a long way with building trust with the client and building that that strategic financial partnership with them, that we can really be along their side to help hit their financial goals that they want to as a business.
Yeah, and as you think about the value-based pricing here, Jake, we get the value, but it does take some discipline, to kind of design the right products and bundles for the clients. Can you walk us through how you guys thought about that and strategize that at Summit CPA?
Yeah, I mean, it's definitely something that we adapted to and learned over time. It definitely wasn't perfect out of the gate on what fell into the different scopes with these different areas, and really broke it down as you guys can kind of see here, the transactional, controller, and CFO level. Starting at the CFO, that's really where predominantly we want to be with all of our clients, and a majority fall within that bucket. And it's really being that strategic, forward-looking advisor with businesses, really focusing more on the FP&A stuff, figuring out custom KPI reporting, really understanding the inner details of the business with our clients. Controller kind of being in between there of a little bit more focus on just past financials for us is kind of where it gets to, and more setting some higher level strategic plans with clients, and not necessarily being as fine into the details. Potentially, this depends on the size of the client, what we're kind of going through. And then transactional almost being the traditional financial reporting area, closing books, giving financial reports, and kind of moving on from there. That's kind of the breakdown for us, that I think clients need and want, on that CFO spectrum, having that advisor, to help guide understanding the financial results of their business.
And just Evan, from your point of view, as we think about now pricing strategies around these bundles, and I think you and I interact with firms on an ongoing basis that are just kind of stepping into FP&A. They're like, can my client afford $3,500 a month, or for that matter, $6,000 a month? Just frame it up for the audience on why you believe, if you're deploying full FP&A services on that far right, why the market can bear $6,000 a month being charged to the end client.
Well, a fractional, for a small business going through growth and looking at how to, strategize the business for positive outcome for the owners of the company, I would argue that how can you not afford to pay for a CFO? This is a mental health check for the business, and not a box that you want to check as somebody who's driving the business and trying to execute a strategy. People don't have time to deal with the ins and the outs and figuring out all the numbers. They'd like to have it sort of delivered to them in a advisory sort of capacity. And $6,000 a month for a CFO who may work across a geography of clients and be able to see things happening in other businesses and inform your business based on what they're seeing in other parts of the economy, is extremely valuable, I think, to a small business owner. And so you're not just bringing a report and a KPI and a conversation about their business. You're bringing I understand this vertical really well. Your business is outperforming, so don't worry about it, or your business is underperforming. And some other businesses are doing these things to do that. And so that's how you justify the $6,000 per month. It's not just crunching numbers and constructing forecasts. It's being a true business advisor or business partner to the company.
Jake, any perspective from you on this?
Yeah, I mean, I agree 100% with what Evan just said, and I think kind of the final piece for like Summit specifically is, that package is is kind of like a full inclusive accounting realm of a business for a lot of our clients. For us, that not only do they have the strategic coach from a CFO perspective, but there'll be a bookkeeper on there, there'll be a senior accountant on there. There's a lot of different layers of financial expertise that is looking at and managing the financial aspects of a business. And so at the end of the day, having someone with that realm of experience, and I think it's something that's very easily budgetable for a lot of your clients. If they're just looking for just a straight up bookkeeper, they might be spending close to that amount. So having that along with having a CFO that's going to be looking at and partnering with you on the financial trajectory of a business, I think is a no-brainer.
Yeah,
and that includes the taxes, right? So Jake, then that often involves working with the owner himself on personal tax planning kind of things that many of them have questions from personal nature.
Yeah, and Mike, I just want to layer one last thing there too that Jake was starting to get to, and that is there's going to be decisions you're making in the business around, do we use Stripe, do we use Chargebee, do we go ACH, and how are we going to manage all these data feeds and things? And having an advisor in early to help make those decisions is very beneficial to the business owner. So there's things beyond the scope of just financial forecasting that you bring to the table as a CFO.
For sure. And we're kind of showing the story here on this slide, going from that transactional services to that true CFO package here where you can 4x your service revenue every single month. But it's just not that simple. And one of the things that I think is important to discuss here is that there's not a million Toms out there in the marketplace that you can bring into the firm. So how you think about it, your staffing strategy here to build your FP&A practice. And I think the way we wanted to frame this section, and this is the last section, is what are the jobs to be done and how to optimize your FP&A practice within your firm. And Jake, I know you guys have given this a lot of thought over at Summit, and Evan, you've seen this over and over again with many firms. But Jake, just walk us through kind of the framework that you've used at Summit to structure the FP&A practice. What's it look like from a technology perspective, the center of excellence perspective? How do the senior accountants, controllers interact with that? And more importantly, how do you kind of improve ratios so you don't have to staff all the team with CFOs? There's a way to do this efficiently and effectively.
Yeah, I think the starting point for us, for Summit, how we deliver on a client relationship standpoint is at a minimum 2 client-facing people on a client, the CFO and the senior accountant. So both of those roles, client knows them by name. A lot of times we'll have their personal phone numbers, working with them on a weekly basis, going through any aspect of the financial piece. And it's a lot of times it's not just one role kind of segmented to one area of the business. They both are kind of working together to deliver the advisory service and the financial product to to our clients. And then from there, it's definitely trying to find efficiencies, to, as you just mentioned at the end, to scale that up to have a good ratio from CFOs to accountants. Ours even isn't at the lower end of 6 to 1. We're probably like 3 to 2 or 4 to 2. 4 CFOs to 2 accountants, or 3 CFOs to 2 accountants is kind of our realm. And I think it's just because also we have such a intertwined relationship with the businesses that are not only our CFOs managing, but the accountants are helping manage as well. The efficiencies come with working, we call them pods, where we group our CFOs and accountants together, where there's some interlap there where CFOs are working with predominantly the same couple of accountants on all of their clients and kind of working together to streamline the service that we're offering. And then at the end of it, it's definitely from my side, figuring out technical efficiencies that we can provide to the team to help scale that, to scale that in a good way. Having obviously the topic of today of having a strong FP&A solution for our clients like Giraffe, being one of those cornerstones, and really trying to break out into a lot of the different areas of the business that we can, and finding a technical, efficient solution that our team members can use.
Yeah. And to add on to that, Mike, just one thing that I see very, very commonly is and the onset of this webinar here today, I talked about excitement, and predominantly individuals that do CPAs or do accounting degrees and become accountants, they're not interested in staying in that one spot. And so there's a recruitment and skilling up of staff to get them to become a CFO. And so when you have this mechanism in place where you're sort of coaching and mentoring and bringing people up in their careers, is a huge opportunity, I think, for firms to up-level their entire staff and provide a much better client service offering.
And one of the things that we see with some of our partners as well is that when they first onboard, they think they need to do it all themselves. They need to do all the jobs to be done that are on this slide just with one person.
Mm-hmm.
That's not necessarily the best model here. And Evan, one thing that we see is that there's a movement towards bringing in these financial analysts to kind of handle the left side of this slide, the center of excellence. Can you just describe that briefly?
Yeah, I mean, financial analysts are a little bit of a different breed than an accountant, right? But where the business partnership comes into play here is accountants understand how the data is structured. This is, bookkeepers and things are structuring the data and things and delivering it for the financial analysts. The financial analysts are doing this job of connecting all the dots and then creating this projection. And so they're able to get into that groove faster than, say, someone who's been only doing retrospective financials and bookkeeping and things of that nature. But that's, to me, where the opportunity is for firms, is to close that gap and bring people into the fold and get a financial analyst in to help train and help other staff members get into these other new products and ways of thinking, for sure.
Tom, any perspective from you on this?
No, I think this is spot on. I think the roles are excellent. And then I think growing it is a piece by piece. I don't think you have to have the entire structure in place to do that. As you grow over time, then you can get those pieces put in place. But I think that those support roles, the senior accountants we have, are excellent, but it makes the CFO job possible and much easier when you can trust that the financials are correct and you've got good data that's there and someone's really looking at it from an accounting perspective. That lets us look forward.
Yep.
Yeah. I'm remembering I spent 5 years in public accounting, and at that time it was always, if you're doing the same thing twice on a client, you shouldn't be doing it. You should have somebody else doing it, showing them how to do it, and you should be doing something new, right?
Sure.
And so I think having that sort of cultural mentality inside of a company, maybe the at-bats are a little bit different when you're, in client advisory services, but if you're doing something the same thing over and over again for 6 months, maybe you should think about getting that to somebody else and going and doing something that's higher value add and learning something new.
It's good advice.
Well, we covered a lot of ground. I mean, every single one of these sections here, the trends, what is FP&A, the steps, how to productize, how to staff. We could have done a webinar on each one of those topics today, but we wanted to thank everyone for attending. And Tom, do we have any questions from the audience that we could answer here?
We don't. We had one about when are the slides available, and they will be sent out directly. But no, we didn't have other audience questions for today.
All right.
Thank you guys, Mike, Evan, Jake. Thanks for all this. And Mike, you're right. We got through an awful lot of content, which is great. And you're right. Each one could be double-clicked to spend a whole lot of time on. As people are here for learning, we've got a couple of offers for people. So to keep learning, we have the Modern CPA Success Show. So a podcast that we produce where we've got clients, employees, other providers who are on there, some of our service providers who help with that. So if you're interested in continuing to learn, that's one of the options. To be more interactive, we really encourage people to join the CFO community, which is on the Slack channel. So we have a code for a free month of access, but we've got other CPAs and firms in here sharing information, asking questions. We have different channels like marketing channels and webinar channels and a fireside chat channel, all sorts of different groups that you can get involved in. So I would hope people would want to take advantage of that. In addition, we're offering a course. So if you really do want that deep dive into offering VCFO services, we have the virtual CFO playbook. So how would you land these $60,000 per year clients? So we talked about, is there a service that could be $6,000 a month? And we definitely see that. This is a pretty intensive course that we've gotten really good feedback on, but 15 different modules to really deep dive in areas. A free coaching session with Adam Hale, one of our founders of the company, and me. Also a free book, subscription to that Slack channel I mentioned, and then once per week, people are getting together for what we call the fireside chat, where we share experiences. People are talking about how they've worked through this. They ask questions, really good sharing. So that's turned into a really good community. So we hope people will look forward to that. So those are our two offers. We're also looking for great people. So if you really liked what you're hearing today and said, I'd rather not build something on my own, I'd rather just join a firm, we'd love you to reach out and contact us for that. So thank everyone for your participation today. And again, thank you very much to the speakers.
There's a couple of quick hitter questions.
Oh, yes.
I tried to post it on there. Draft integrates with QuickBooks Desktop, also QBO, Xero, NetSuite, and Sage Intacct, I think, Evan. Tell me if I'm right on that.
That's correct. Yeah.
And I think we covered a little bit question about, for weekly clients, how do you handle the staffing from the accounting firm standpoint with time away, sick time, etc. As I mentioned, we have at least 2 people on every client, the CFO and the senior accountant. So there's a little bit of the overlap there when one or the other is out. Our clients are very flexible. So even if both people happen to be out, we're almost like an employee to them. So they are very understanding of that, as long as it's not like moving meetings or canceling meetings 3 times out of the month. So they understand that 2, 3, 4 times of the year we might have to skip a week, sort of a deal. And on the same side, I think we're pretty flexible on the clients. Question of when the client needs, client has a conflict. If it's something pressing, where we'll look to reschedule with them where we can fit that in, and if not, we might have to skip a week. But they're always very accommodating schedule-wise, and I think we also do the same thing for them.
Yeah, thanks, Jake. I missed those questions. I had only part of the window up.
I was just sticking into those right now. I think we've answered all of them now that are coming here. So just as additional resource here, beyond what Tom already shared, if you want to learn more about Draft, just go to draft.com and you can just click on accounting firms and then click on the partner program there. We'd be happy to go ahead and set up a consultation with you. Then Summit CPA's address is right here at summitcpa.net. Tom, that's a wrap.
Yes, it is. Great. Thanks, everybody.
Thank you.